Hey, it's Mac with PriceActionTradingSystem.com, and this is Tuesday, February the 5th. This will be our chart lesson for today. First things first, let me show you a couple of things. Today was kind of a unique day because there was the major trend, which I believe was here, but then there was this somewhat of a channel too here. So sometimes you get what you call a spike, and then prices go into a channel, and that's exactly what this looks like, a spike and then a channel. Generally the spike will not be like a two-legged move like this. It'll be just a huge move up or a huge move down, and what it is the move is just too much, and so prices will correct a little bit and then go into a 45-degree angle. Just remember that most of what I would call a good solid trend that's going to continue to trend properly will usually be at a 45-degree angle like this is right here. When you see them that they're steeper or flatter, if they're steeper, they're too strong and they're not going to last, and if they're flatter, they're weak and they're not going to last. A good solid trend that's going to keep going will generally be at a 45-degree angle. So just keep that in mind. And that's why a lot of times you'll get the spike and then go into a channel. So it's looking like this might have been a spiking channel, although there was obviously a fairly good trend line here and a channel, but you see we never went back and tested that high side before we broke that one, and then this one came into play, and then we broke the channel, and now we're making two legs to a new high. So we may sell off here now. So we just got to wait and see, but you know, this is not a common day. Normally the trend is very obvious, very clear, and, you know, there's no question that this one is kind of questionable because you can find, you know, the channel as well. So that's why you keep drawing your lines and keep checking things. We had a trading range here and then a trading range here. And another thing, just remember, I've talked about this before if you haven't heard it. Usually when you have a trading range, and you break out, the next range is going to be about equal height, and you can see that. You can see there's, let me go a little further, maybe one more tick, and you can see that's the width of the first range, and then look, the second range is exactly like that. So that should have, you know, you got to remember that when you break out of that range, your target should be the same distance, and, you know, at least be aware of that and be thinking, if you didn't exit right here, if you got in down here, and this is a great setup, so hopefully you did. If you didn't exit here, when it came back up here and ticked higher and then started backing off, I definitely would have exited in, because you don't want to give all this money back. And, you know, when the third time we came up here and it started falling off, I definitely would have been out then. But the smarter play was to get out right here. The smarter play really was to exit this thing the same distance, in my opinion. But sometimes, you know, prices will break on through and go higher, so you don't want to sell yourself short if you got a runner, because it's a freebie anyway, and that's why we use them. But just be wise about it. Definitely when you didn't go higher and you went into all this overlap right here, I would have exited. So, but let me show you something else too. Notice that in the overnight we had this first little leg up here, and then notice this leg, a perfect exact two-legged move. So, and it's way overdone. It's up here, and when you got up here and got your measured move, and then you had this little fake out right here, notice that prices, let me make it a little bigger, get this out of the way, prices ticked one tick lower and turned up and closed on high. That really looks like a trap, but you should be thinking about going, you should be hesitant to go long way up here this far away from the EMA, and that's why I don't. Especially if you found this first trend and you drew this across here, then you know you're probably overdone. You might have even drawn it like that, and then you definitely know you're overdone, and that's probably even more like it right there. I believe that's correct. So when this made this little trap and ticked higher right here and then ticked one higher and turned down, that was a good place to go short. Definitely when it tried a second time, because that's a second entry. This is not as good a setup because you got this ended as a doji and you got this overlap, but the best place to enter was right here and put your stop just above it, a tick or two, and then that was an easy move down. But this is, you know, all you're looking for here is a move back to the EMA or a scalp, because it is a counter trend trade, and that's why I drew this in green. But it's a really good setup, but it fits our criteria for a much more aggressive trade, but it's counter trend, and I don't recommend unprofitable or new traders try that, because you're just going to lose money most of the time. Because look what would have happened right here. If you tried to go short there, you got fooled, and look, it went higher. So you really got to know how to read the price action. You got to really understand, and then it's still aggressive and it's still a gamble. But hey, I'm willing to risk for a setup like this. I'm willing to risk a point, which is all you really needed to get a good stop. I'm willing to risk a point to try to get two on the way back to the EMA. Pretty good setup there. And you actually could have got a little more than a couple of points on that trade, depending on where you exit. I really thought we'd come back to the trend line, but we didn't. And but one thing too is you might have originally drawn your trend line like that right there, and if you did, you were back to the trend line. So that was a little confusing. And I'm just going to put this over, but you see, even that gives you the overshoot. So you had the overshoot either way, but I believe this to be the trend line right here. And I believe that to be the channel. And then we broke that, but I really am leaning on the fact that this was a spike in channel, and we had this channel going up. We just had to break, and now we're working on two legs up to a new high. That's what it looks like to me. But the thing is, if you get close, in most cases, your trend line doesn't have to be perfect. If you get close, you're going to get where you need to be. And occasionally, if your charts if you're not drawing your trend lines right or pretty close, fairly close, I should say, you might be in trouble. But for the most part, if you're reading the price action right and you're drawing your trend lines somewhat close, even if they're not perfect, you're generally going to get the same trades, the same setups, and it's all going to work out the same. But anyway, that first trade there, really what I'm doing is, and that's a little bit before 7 too, but it was nice enough setup that I thought I would talk about it. So, but anyway, I wouldn't have taken this second entry short. There is a trap there, and you could have considered that, but by this time you got too many overlapping bars. That's a doji. And generally, when you go short below a doji, it doesn't work out very well for you, especially if it's counter trend. So that's why I drew that in green. I drew it in green really because it's just a more aggressive trade, and I don't recommend it unless you're a more advanced trader. And we do have some of our traders that are more advanced, so they like to hear me talk about them. So that's why I started drawing them. Just remember, anything in blue is a long. If it's a red circle, it was a valid short. And if it's in green, it means it met our criteria, but it's much more aggressive, and it's not really recommended for unprofitable or less experienced traders. So, but let's talk about our first trade here. This was the first bounce off the trend line. There was a little bit of a trap here too. There's a failed second entry short. Hopefully you can see there's one leg down, a pullback, and then a second leg, and you got this little one tick below the trend line, then it reverses one tick below. It's actually a couple of ticks below these matching lows here, and we know prices usually snap back on that. And that's a nice reversal bar. Prices moved all the way down here, and then went all the way back and closed on the very high. So you could have gone long right there. The good thing about either one of these entries, there's actually 3 entries here, and I'll talk about each one. But the best thing about all of these, and these are right at the 8:30 open, the best thing about all of these entries is your runners would have been safe on any of them. And you could have ridden this all the way to the high. I probably would have exited right in here. In fact, I did exit right in here on my trades. So no probably to it. But then you get a chance to re-enter, and you get some more scalps and stuff. But we'll get to that when we get there. But this was a nice setup. The next setup, actually going back to this again, generally what I recommend is you always put your stop a tick or two below the signal bar. And I like to do 2 ticks if you've got enough room. Remember, 2 points, you don't want to ever have a stop bigger than 2 points, because if you're 2 points wrong, you're either way too early or you're reading the price action wrong or something. So the best setups are never going to go 2 points against you. So if it's more than 2 points, you're either way early or you read the price action wrong, or you got trapped or something. So stick to your 2-point stop, and when you find your signal bar, and that's a beautiful signal bar, um, 1 or 2 ticks. And I like to do 2 ticks because it's amazing how many times you'll get, like right here, 1 tick, just to run everybody out and trap some more shorts in, and then it reverses. So you'll see that quite often. You'll see a high and you'll see it go, or a low, and you'll see it go 1 tick lower, and then suddenly it reverses. And here's another example. I think this one, yep, right there. There's your low, and notice what it did. It went 1 tick lower and then reversed. And so that's why I like to use 2 ticks. I'm willing to risk 1 extra tick a lot of times to make sure I don't get tricked or trapped out or trapped in or whatever. So, but then you got a second entry long right here. This was your first entry, pullback, second entry. That's off this low, and this is a new low because you got a low right there, and then you went up and came back down. That makes this a new low, even though it looks higher than that one. But first move, and then now we're looking for a second entry off the low, and so you could have entered here, and you might have, if you did, you might have gotten shaken out. But then you got another chance to enter right here, and this one is a little more risky because you're getting close to these highs. But with that many tests of that trend line that held and another reversal bar, and notice those 2 matching lows and that little 1 tick trap, it's just taking a little momentum and a test of this line to get enough people. And now you got a failed second entry low, first entry short, second entry short that failed and reversed. So you got a nice trap. You got to be thinking we're going higher because we're bouncing off this trend line all the way up. And so there were 3 entries there right at near the open this morning, and all of them would have given you a nice move up to these highs right in here. You wouldn't want to exit here necessarily because of the overlap, but when we went higher and came back, and then then you want to think about exiting on the next, especially on this bar right here. And so if you, depending on where you entered, 4, 5, 6 points maybe if you got out. But once you went into this trading range, that's when I would be thinking about exiting. And you can see this right here. And if you didn't have this channel yet, you definitely should have been wondering about these, why we couldn't get any higher, and drew that line, and then once you draw that line, then you drag it down, you see it fits down here perfectly. So always draw those lines and keep an eye on them. Actually, I think it was right there. And so anyway, next trade, you got a double bottom, and this is a 2-legged correction down to retest. It's just like a retest, and you're really in a trading range now. But this is a second entry long. Notice you got your new high, your pullback, first entry, pullback, second entry. Go long right there. Easy scalp, nothing more. You have to exit, and then it pulls back again, and then now you got the trap. And that's what you'll see a lot of times if you trade up into a tight range like this. Sometimes it'll break on out without a trap, but generally what'll happen is you'll get a trap, which is just like this. You get 1 or 2 ticks lower than, or you might even get a whole point or 2, but you'll break lower. Generally when they're this tight, you won't go very far, but you'll break lower out of here, and you'll trap a lot of new shorts in is what happens. People are thinking, I'm going to go short right here. And this is why we don't trade breakouts. You got to, if there's a breakout, we're thinking about fading it more than we are taking it. Because even if they're going to go higher, they pull back like right here. So, but so many people think, hey, if this keeps going, this is where I'm getting short because that proves me we're going lower, and all it does is reverse on them. So when you get this breakout, it traps in a whole lot of new shorts that think there's a top, and what it does, it scares out all the longs that got long here and here and here, and maybe even bought blindly here. It scares a lot of them out. They go ahead and take their stop, and then guess what? It reverses. You like to see a better close on a bar than this, but there's still enough room to scalp out before you get up here. So this was worth taking. It's really a two-legged correction. There's two legs in this leg, but that's one leg, pull back, and then second leg. And we're coming right off that possible channel. We got the lows here, just a lot of support right here and reasons why to take that trade. And wow, look at it go. This turned out to be the best trade since earlier this morning, you know. So that's a great setup, but it's because of that trap right there. And so, you know, don't be thinking short down here, be thinking long. And don't be thinking long up here. You may not be thinking short up here, but you definitely don't want to be thinking long. And notice I didn't mark any shorts, even though there's some that would have worked, because the trend is up. This is the first break of what I thought was the major trend line, and there's been no break of this line. So depending on whether this is a spiking channel or if this is just a channel that we got to break, you got to think about the retest. And then there's your retest. But there's no real setup. And a lot of times you'll get two legs up, and this may be the second leg working right here off of after this leg. But one thing I always have to remind people is that just because you get a trend line break and a retest, it doesn't necessarily mean you're going to get a new trend in the other direction. What it means is you're going to get a correction that lasts usually at least about an hour. And so keep that in mind. Don't get fooled to thinking, you know, most of the time it will be a reversal. But when the trend's strong, a lot of times you just get an extended correction, and that's all this little range is. And you can see it's kind of making lower lows and lower highs. It's an extended correction, and then guess what? It takes off to the upside again. Now, this could be the trend line break of the spiking channel, and now two legs up to a new high. Now we may sell off, but if you look closely here, and I don't want to tell you too much in one day and confuse you, but there's really a two-legged correction here on a bigger picture. And sometimes that's the middle of an equal move. So will we get another leg like this one or this one? That's a great possibility. So that's something you got to consider. And let me just show you the two legs. There's two legs. There's a couple legs down, but that's one leg right there. And then you got a two-legged correction in the middle. And then look, you got another leg down. And so there's a two-legged correction with a two-legged correction in the middle of it. But in that two-legged correction, there's two legs and then two legs. So just remember the market moves in two, so it's not uncommon to see a lot of this. And you probably wouldn't, most people that aren't used to looking at a price chart probably wouldn't see what I just explained there, but trust me, it's there. And with time, as you get experience, you'll learn to see that stuff. So if you don't see it now, don't be too concerned about it. Just try to look for it, try to understand it. And, if you need to open up, don't do it while you're trading, but, at the end of the day, open up a bigger chart and open up a smaller chart, and you'll see some of these, the smaller pictures and bigger picture stuff that I'm talking about. But your goal should be to learn to see it all on one chart, and you can. It just takes experience and time. So, but that was the, I can't remember if we talked about that trade. I've talked about so much. No, we didn't talk about this trade. We talked about this one and then exiting up here. But then you got a two-legged correction back to the trend line, back to the EMA. There's a long setup right there. It's not a great one, but it's coming off that trend line, so you just about have to take it. And guess what? It corrected a little bit, but it got just enough to get your 6 ticks, which it takes 1 tick to enter, and then a 5-tick move to exit on a limit order. And you got just enough to get your scalp, and then it sold off again, and you got a trend line break. But if you didn't enter here, there's a second entry here, but I wouldn't take that one simply because, let me make this bigger, make sure you can see it and get this out of the way. Because look, it went higher, it pulled back, and then it went up again, but that's a doji, and now you got 1, 2, 3, 4, 5, really 6. You got too many overlapping bars. You got to get in above that bar, which is way up here, and there's not much room to scalp out. So that's not a good setup there. But this one's questionable, but because it's the second entry and we almost closed on the high, I believe that it was worth taking coming off the trend line. And but if you didn't take it, I can understand why it was probably a smart move, but it would have been enough. You could have got out of that trade. And then I drew this one in green. This is just a repeat. This is right here is a repeat pattern of this. And notice that you finally got this break lower and a reverse higher. And you could have gone long right here. If you didn't go long there, I would have been really hesitant to go long right here. So I wouldn't have taken that trade right there. And you can see what happened. It turned and went lower and came back. But if you didn't take that one, then you had a second entry long right here, and that's a nice reversal bar with that trap, and it's just bringing prices back down to those lows, and you can see that right there. So it retested that, held, and closed on its high. That's a retest. Just put your stop order right there. This one moved really fast, so there's a chance you didn't get and if you dropped a limit order here, most of the time it's going to tick back and fill that and go higher, but it couldn't. The market was too strong at that point. All the smart traders got in down here somewhere. So you may have missed this trade. You may not have had time to get your order in there and get it filled. So, but anyway, that was pretty much it for today. Again, hopefully, if you were having trouble figuring out what was going on today, that kind of explains it for you. And it was kind of a little bit more difficult day to see, simply because you may not have recognized this as a spiking channel, but I believe that's what it is. And we'll just have to see how the day ends up. But, again, notice what happened after the early morning. You just, really from 9:30 to almost noon, there's nothing going on. And it's just kind of been a slow day. All the movement was early. So, but we're getting back up in here. We're back above 1,500 again. And a lot of times when you get around these century marks, it takes a while to get through them. And then they come back and test it multiple times before you move on, really. So who knows what's going to happen. I will tell you this, and I don't trade from it. I do follow the commitment of traders. I don't know if you're familiar with that report, but it basically just shows the number of contracts that are outstanding in different markets, and whether there's three categories. You got your commercial traders, your large traders, and then you got your retail traders, so to speak, your small trade. They call them small traders, but guys like me and you that trade, a handful, one to a handful of contracts or whatever. And so when you see those commercials, when they're all short, extremely short, the market's probably going to sell off, and when they all get to some extreme high point, the market's probably going to rally. And those guys have been the commercials. They're the guys that really move the market, that affect the market. They buy in large numbers. And I did notice that they have gone from a net short in the S&P to net long, and so that's telling you something. So I got a feeling that, we may be about to see this market rally again. And, you can't go trading on that, but just something, it's something I watch. It's something I keep my eyes on. But you can't let it bias you. You just got to follow the price action and go with it. But wouldn't surprise me if those guys continue to build a long position, that eventually this thing's going to break higher. And it looks like it's trying to do that now. So they may be indeed building that long position and driving this market up. So, but anyway, I'm going to wrap it up. This is Mac with Price Action Trading. Actually, one more thing, one piece of housekeeping. There may not be a chart lesson tomorrow. There's some things going on tomorrow that I'm going to be out of the office in the morning. I may come in, and depending on what time I get done, I may come in if I can trade before 1 o'clock or so. But I got a feeling I'm going to be out most of the morning. And so there's probably not going to be a chart lesson tomorrow. If I can get back in before it's too late, I'll still do one, even though I'm not trading. But if you don't see a chart lesson tomorrow, you will know why. So I just wanted to throw that out there so you didn't get confused. But anyway, I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.